Hello guys, this is Victor Snow from Trading from the Soul. I'm here today to teach you guys about the concept of order blocks. So guys, before the era of order blocks, what did we actually trade? We actually traded the concept of support and resistance. We believe that when price gets to a certain level called the price ceiling, we start falling down, and when we get to a certain price level known as the price floor, we start climbing. Why this traditionally works, I don't totally agree with it. In fact, it doesn't work. That's not how price moves. Let's answer this. Who are the most important participants in a market? The recent people that just moved price. So if you tell me what they did the previous 2 years will determine what they will do now, you are not right. Studies have shown while we can actually determine people's previous emotion with price floors and price ceilings, we can't tell people's future emotions. That means that we can't tell whether people will be able to respect that level in the market. Why I respect people's strategy? I would say that OBs are found in support and resistance zones, while support and resistance zones are not found in OBs. So here is a video on what OBs are, how to spot them, what they are made up of, and how to trade them. Let us begin now. So guys, what are OBs? I would say that OBs are significant places in the chart or a level where buys and sells orders were concentrated, and these buys and sell were concentrated from what institutional involvement or fundamentals. A bullish OB is that one which they were what, where buys were so concentrated that they would overpowered the sellers in the market, while a bearish OB is that in which they were buyers in the market pushing market for a retracement, and what sellers came in and what they were so much sales at that level that they overpowered the buyers right there now. And this overpowering can't just be done by a retail trader. It is definitely from either from fundamentals. A big amount of news came in that pushed price down, or institutional involvement in the chart. So we're going to be learning how to spot them in our chart. So guys, for us to be able to spot a bullish OB, first rule here is that there must be a break of market structure. So you come to your chart now and you locate the most recent break of market structure, which we've learned the rules of break of market structure. If you haven't seen the video, it will be linked here for you. So once you've been able to spot a break of market structure, now you then come back to your candle level. Now the rules we use for the candle is what? Selecting the right OB candle is what? Not minding the candle's color. The last candle before the institutions overpower the market. So we say last candle. It's the last candle before the buyers step it in. The same rules applies with a bearish OB. So guys, in this scenario now, a bullish OB here now, an example here is what? First of all, spots. We said what? A break of market structure. This is our break of market structure. Now you come back towards the candle. This is the candle here. So now the last candle before market actually broke this market structure is what market started buying, is this one. You mark it from the week down to the last week now. So guys, let's take a look at another example of this. This one, the last one, this is the last one we just spotted. So for here now, we spot here now a break of market structure. We know the rules for a break of market structure. This one is our valid break of market structure. Break of market structure. Then we go for the last candle. And remember, in that rule we were talking about, we talked about not minding the candle's color now. So which one is our bullish OB here before the buyer stepped in now? Which one? Some people will mark out this red candle, but it is not actually this red candle. It is the last candle now before markets moved in. We will mark out this one as our bullish order block. This blue candle here now. Why? Because of the rules here is after break of market structure, not minding the candle's color, whether bearish or bullish candle now. The last candle before market started buying. And how do we now know the last candle before the market start buying? We look for the candle that engulfed here now. For you guys that don't know, an engulfing pattern is when a next candle totally close way above the last candle, the wick of the previous candle. Look at this candle here. So look at the previous candle. It would overpower here now. That's how we know that buyers actually came in. So to make this thing more clear, let's look at the bearish scenario. So the same rules, a bearish will be here. Can you guys be able to spot this one for me now? Yeah, now. Definitely this one, you got it right. People will wait for here and definitely they will continue selling the market. Something like this, they continue selling the market. So another example of this is this one now. The last candle now. We look at the engulfing now. Now looking at the candle's color now. An engulfing pattern for us. This one sellers. The engulfing pattern tells us that sellers actually overpowered the buyers in these markets now. Yeah. So our bearish OB is definitely this one. Let me hear our break of market structure. PMS. So guys, how can we now know what an invalid order block is? An invalid order block is when we don't have a break of market structure. That's just definitely late. Another way to spot an invalid order block is just example this scenario now. What people will do is they'll come and spot this one. Cover here to the week now. But it is an invalid order block. You have to check the last candle before buyers stepped in, which will use the engulfing to overpower here. Another way to spot an invalid order block is some people will mark out an OB like this. An OB like this. Sorry, let me use this example. Some people will mark out this OB here. Stop here. That's not it. You check the last place price came to. That's the week to actually know a valid OB. So guys, another way to find an invalid OB is what we call a fair value gap. A fair value gap is definitely something like this. We believe that every OB should, what validates an OB is the imbalance here. That's a fair value gap. We can see that this one is an invalid OB. It doesn't have a fair value gap here. So let's see whether we'll be able to see what we just learned here in our chart. So we see the first rule for an OB is break of market structure now. We look at the candle, not minding the candle's color. we choose this candle actually engulf this one as the row I use, and you mark to the end of the week. Another example of a bullish will be here, break of market structure here. What? Let me actually name these guys, I beg. Make things clear for you guys. So here to here, bullish will be. We can see how price respects these levels in the market. So example of what a bearish will be. This will break of market structure, the last candle before market starts coming down now. You can see this one is what, not minding the candle's color now. Let me see whether I will zoom it in so you guys will actually see it very well. Not minding the candle's color now. The candle, this candle actually engulfed this one. This one is our bearish OB. Break of market structure. Let's see whether we can spot this one. Break of market structure. Let me take break of market structure. You can see this candle engulf this one. It's just a show of these guys, sellers coming into the market. To validate this OB, we will have what we call a fair value gap right here. So after this video, you should be able to, get your charts. You try to spot these guys, move around and get used to spotting them. So guys, if you definitely want to trade support and resistance, you have to include these OBs while trading them. In fact, if you get a support and resistance and you see an OB in it, that's what validates that zone. That's how I get my higher probability setups. So guys, a quick summary of what we learned in this video. We learned order blocks, which in a bullish OB, sellers, buyers, they were orders now that concentrated orders that overpowered the sellers right there. And we use the candle system to name the particular candle. We say that not minding the candle's color, you mark out the last candle before the sellers, the buyers, a bullish OB, the buyers overcame the sellers, which we use an engulfing pattern candle. The subsequent candle must be an engulfed one. And we also use the break of market structure rule. The same applies with a bearish OB, and we were able to validate an OB, a high probability setup. We can use a fair value gap in the market. And we talked about to make an OB more stronger is use support and resistance zones to make it more stronger. So guys, I want to thank you for making it up to the end of this YouTube video. Please do well to give this video a quick like and a subscribe if you really got value in this video, to continue seeing these kind of knowledgeable videos. So guys, actually in trading, we have set of rules we actually follow for us to have a consistent result trading. We made mention, in order to make our OB a high profitable one, we have to be able to include a fair value gap I mentioned. So you should be able to spot those fair value gaps correctly in the market, know what they are made up of, and how to trade them. And here is a YouTube video on how to do that. See you there.